Hey there, DigiCoin Daily Squad! It's time to dip into the dynamic world of crypto, and today we're focusing on how regulatory shifts are rocking the crypto boat and how our beloved Bitcoin is faring. You see, crypto companies in the US have been facing some turbulence recently, courtesy of SEC's Gary Gensler. The question is, are they sinking or swimming? Here at DigiCoin Daily, we've been championing the Bitcoin cause since 2020, affirming it as the only institutional-grade investable asset in the crypto space. And it seems like our dedication is paying off. Bitcoin is becoming globally acknowledged as a digital commodity to reckon with.
I feel like we already have clarity in terms of the U.S. regulatory regime for now. Gary Gensler at the SEC seems to want to stop any crypto companies in their tracks and either have them close their businesses down completely or move offshore. How do you think? How do you think it's all playing out?
Well, I think MicroStrategy's view since 2020 has been that the only institutional-grade investable asset in the crypto space is Bitcoin. Bitcoin is the universally, globally acknowledged digital commodity in this industry. I think it's pretty clear that the regulators don't see a legitimate path forward for cryptocurrencies like the stable coins, crypto securities like the tokens mentioned. They don't have any love for crypto derivatives. They don't have any love for crypto tokens, and they have a view of crypto exchanges which is far constrained. I mean, their view is crypto exchanges should trade and hold pure digital commodities like Bitcoin. And so the entire industry is kind of destined to be rationalized down to a Bitcoin-focused industry with maybe a half a dozen to a dozen other proof-of-work tokens.
Why is that? It's simple. Regulators don't see a legitimate path forward for many other cryptocurrencies. Stablecoins, crypto securities, crypto tokens, and derivatives, they don't seem to be attracting much love. The SEC stance seems to favor exchanges that trade and hold pure digital commodities like Bitcoin. So we may be seeing a consolidation in the market towards a Bitcoin-focused industry. Now, you may ask, what's the fate of the exchanges? Would they survive with only Bitcoin? Well, let me offer a perspective. Yes, there's been confusion with the multitude of cryptos out there. However, as Bitcoin emerges as the dominant asset, we believe the value of Bitcoin could increase tenfold or maybe even more. That's a good business model, don't you think? Let's look at the facts. Bitcoin's dominance in the crypto economy has grown from 40 to 48% this year alone. If stablecoins and tokens fade away, Bitcoin's dominance could potentially rise to 80%. The delay in institutional investment has been due to confusion and anxiety. Once that lifts, we could see a major influx of capital into Bitcoin.
So, Michael, what happens then to the exchanges? In the U.S., at least, it seems, if they're only going to offer trading in Bitcoin or other, clearly pure commodity tokens, that's not going to be a great business model. Do exchanges in the U.S. just go away?
I take a different point of view there. I think there's been a lot of confusion because of the 25,000 other cryptos and because of all of the crypto securities that have been angling to position themselves as the next Bitcoin or a better Bitcoin. So now I think that the public is beginning to realize that Bitcoin is the next Bitcoin. The next logical step is for Bitcoin to 10x from here and then 10x again. So Eventually, I have confidence that the crypto exchanges will come around to realizing that Bitcoin really is the dominant asset in this space. And their business models are fine when Bitcoin goes up by a factor of 10. And, we can see that the dominance of Bitcoin in the crypto economy, as measured by coin market cap, has moved from 40 to 48% this year alone. But I think that as the stable coins and the tokens go away, that long-term dominance is headed for 80%. And I think what you got to remember is the reason that we don't have mega institutional money flowing into this space is confusion and anxiety. When that disappears, you're going to see mega amounts of money flow into space, and the business models will be just fine focused on Bitcoin.
Now, let's talk about exchanges like Coinbase. Despite the regulatory overhang, there is a huge need for exchanges that help investors acquire and have custody of Bitcoin. Especially as institutional investors enter the scene, companies need custodians, and that's where exchanges have a crucial role. So, are we seeing a bullish future for Bitcoin? Absolutely. Improved accounting treatment, the expected halving, a surge in hash rate, and regulatory clarity. All these factors are laying the foundation for a new bull run. Exchanges can play a critical role in this scenario, helping investors buy, sell, and custody Bitcoin.
You've outperformed Bitto and Grayscale and other, ET exchange traded products year to date. How is your strategy though and your company different from one of these, products that just hold large amounts of Bitcoin?
Well, we're an operating company, so we have a profitable software business, and so we can sweep the cash flows of our software business into Bitcoin. Our aim is to allow institutional investors to get Bitcoin exposure, but without charging them a fee and generating a yield when we can. And because we're able to tap the debt markets, we're able to issue debt, we're also able to refinance or pay back our debt, like when we retired our Silvergate loan earlier this year. We're able to issue equity when it's accretive. We're able to purchase Bitcoin with cash flows when it's accretive. So those are our flexibilities you have as an operating company. If you're an SEC 40 company like an ETP or like Grayscale as a trust, you can't really do those things. And the result is, Bitcoin is up 55% this year to date. MicroStrategy is up 92% this year to date.
Finally, let's touch on MicroStrategy's Bitcoin accumulation. The company has been working with a variety of institutional-grade Bitcoin companies like Coinbase. Unlike ETFs or similar entities, MicroStrategy is able to access the Bitcoin spot markets and hold Bitcoin, as well as access the equity and debt markets for their Bitcoin acquisition strategy. This flexibility is driving their success, with MicroStrategy up by 92% this year compared to Bitcoin's 55%. That's it for this dive into the regulatory wave and the resiliency of Bitcoin. Don't forget to like this video if you found it helpful, and subscribe if you haven't already. Become part of our DigiCoin Daily Squad. And remember, always keep an eye on these end cards for more engaging content from DigiCoin Daily. Until next time, keep surfing those crypto waves.